Hello everyone, welcome back to Chill Trades, the most accurate stock market channel on YouTube. Today we're going to be covering PaySafe, PSFE. The stock has radically crashed recently, and so we're going to figure out where the stock would be headed, if this is a dip buy opportunity, or did it really sell off for good reasons and to stay away. But I'm covering the stock because I commented on a video a while ago saying that do not buy this stock when it was at $10. And look where it's at. That's why I say we're the most accurate stock market channel on YouTube. But somebody asked me for an update, so I did it. And a reminder, please ask me to do videos. There's some things I don't cover, like biotechs, but I'm open to talking about a lot of stocks. So put it in the comments. And if I can't cover it on a weekly video, Friday live streams at 7:30 Central Time, where we can talk about any stock you want together. Well, let's jump into things. So PaySafe, PSFE, if you don't know what it is, hopefully you do. Payment process for the most part. They do digital wallet. They do e-gaming, so processing payments on the backside for gaming, like in Fortnite and other places. So that's a really general overview of what they do. So right now, just to go over some basic statistics or some basic stats of the company, market cap around 3.2 billion. Recently, they sold off drastically off of missed earnings, and that's mostly what we're going to dive into before looking at the technicals. So the first thing is, why did PaySafe plunge? So PaySafe's revenue declined 1% year over year. So revenue slightly down year over year. And they kind of talked to weaker than expected results for their digital wallet, which was a really big potential for the business. And they're coming up with a lot of, they're having some trouble growing that side of the business. And then the second thing is also that their EBITDA fell 1% and their net loss expanded to $148 million compared to a $38 million loss last year. And so those are the two main reasons. I'll break down why these are the two main reasons, or two of the three reasons why the stock went down. So whenever you have a growth company, and people still consider PaySafe a growth company, they've been around for a while, their revenue hasn't really shown growth over the last couple years, but when they went their reverse merger on a SPAC, they said we were expecting huge growth through 21, 22, 23, 24, and so far they're not hitting those expectations. And they actually did a downgrade, so they reforecast this year, and they said their revenue is actually going to come in lower than they first expected and potentially persist into 2022. And so what we're seeing is declining revenue and inclining net income loss. Those two are a big recipe for disaster. It's only one quarter, so we don't know if it's going to tell the whole story, but we're starting to see signs of a not positive revenue trajectory set itself up. And so this is why the stock fell basically 50% or 40% or whatever it was. We cover Root insurance on this channel a lot, and the same thing with Root is they lose a lot of money and their revenue is declining, and that's why these stocks fall. So you really want to pay attention. How is revenue looking? How is net income loss looking? A lot of times companies can get away with net income loss if their revenue is growing 30, 40, 50% year over year. But when a company has flat or declining revenue and expending net income loss, that is a really big negative, and that's when people start pulling out their investments in the company. Another interesting thing that happened is they had a price cut to $4.50. So things like this, I don't really pay attention to analysts' price targets, but there is a psychological aspect that happens. And so this is just something to pay attention to. Retail investors love price targets, and so this is like more of a psychological thing that we need to pay attention to. And then lastly, I actually want to get into some of the details of their earnings to figure out kind of, intricate level how things are looking. So what we already kind of covered is total payments. This is a positive increase, 19%, but their revenue decreased 1%. So what's going on? Going back to the digital wallet, actually let's scroll down to that. So going back to the digital wallet, what we see is last year, 98, I think this is million, 980 million maybe. Oh no, I don't know what exactly this number represents in terms of millions, but 98 versus 83 this year, so that's a negative. And so far year to date, we're down 7%, and we're 15% down year over year. And so this was I would say one of the biggest opportunities for the business, But what we're seeing is we're seeing digital wallets kind of go insane right now in the fintech space. PayPal launching their own digital wallet. You have SoFi getting a lot of momentum in digital wallet space. You have people like Robinhood doing digital wallets, digital payments, credit cards, things like that. So this space is honestly becoming really overcrowded and everybody can't win. And so if this digital wallet kind of, if they don't see the increase there that they expected, this could have a prolonged negative impact on the business. One of my favorite areas for the business, let me see what article it was on, is their iGaming. So I think that's where this company specifically has, I'm trying to find the part of the article, but that's where I feel like this company has, I think it's in integrated payments is where their iGaming is, but I think that's where the company has the most opportunity. I personally believe that gaming and in-game purchasing is something that is going to continue to grow more and more over the years. And so I think that's the biggest potential for their business, or maybe it's eCash. I'm not sure off the top of my head, but I think that's the biggest opportunity for the business holistically is e-gaming. And I hope that they continue to make more investments in that than others. Let's go ahead and go to their revenue, because one thing I said is their net gross profits. It's still positive this year, but we did see net loss for the company, 147 million. So that's where the issue is if that number keeps expanding, year over year, this year versus last year, we do have a larger number there. So we have gross profits flat, but we have net income attributable to the company is growing. So that's not really a great sign, seeing revenue stagnant, but that net income growing. There's one more. Let's see if it was on here. Where was it? Oh, their cash. So the last thing I want to get to is their cash and cash equivalents. So it's down about 120 million year over year. And so this is, I would say, another area that's going to be a problem for the business is for PaySafe to grow. I think their company has been around about 10 years. For this company to grow, they're going to have to acquire companies at this point. They made an acquisition, I think 3 or 4 months ago. It was a company in Latin America having to do with payments. And they're going to continue to have to make these kind of acquisitions to really grow the business. And not having a ton of cash to make those acquisitions is going to be a problem. And so I can definitely foresee them having to dilute shares at some point more to raise, they're probably going to need another $500 million to $1 billion over the next couple of years to really help the business grow. And so diluting shares is going to have another negative impact on the company overall. So let's get out of the finances because we went crazy on the numbers. Before we get to the technicals, last thing I want to bring up is we haven't had much buying since the first quarter. We've had more selling than buying, which is never a great sign. About 500 million last quarter, in Q3 about 400 million. So we're having net selling. That's never a great sign. With the stock going to $4, we're really going to want to pay attention to the transactions. Are we seeing more net buying or net selling at $4? Because if we look at that, we can really determine, have people given up on PaySafe, or is this a little bit of an overreaction and we start seeing big money jump into this? For example, 11 million buy, that's pretty decent. 26 million buy, that's pretty a decent size buy. 10 million, decent increase to position. So we're seeing some decent increases right here. That's a big sell. So that's not great. Another big buy. So, we're seeing a lot of big buys recently, which could say this $450 range-ish is maybe a good opportunity to get a little starter position. But lastly, let's get into the technicals. Unfortunately, there's not a whole lot of technicals to dive into, and that's mostly just because the stock is at its low lows. But I actually want to go to the hourly for this. So what we're seeing on the hourly is that the 20 EMAs have caught up, or I think this is the 20. Let me change the color real quick. I believe this is probably the EMA. Oh, the 20 moving average is actually at the current price, and the EMA is a little bit higher. So right now where we're at, we're kind of in this sideways consolidation that it hasn't broken above before. So right about this 454-ish range, it needs to break out of there. If it breaks out of there, it could move to 480. If it does move to 480, let's go ahead and look at where the 50-day is. So the 50-day is probably still a little high from where the stock could move. But if we do get a lot of volume, and maybe this was an overreaction, the next two places I'm going to be looking at for a potential buy-in if it breaks above this 455 range is the first one is going to be around this $5. And so we have the top of this candle. And then we also have on the 30-minute, we kind of have the 50-day around there as well. On the 30-minute, let's go ahead and see where the 20-day is. On the 20-day, we're just above it on the 30-minute chart, so looking for the 50-day. And then if we're able to get above this $5 range, say there's a lot of momentum over the next couple weeks, on the hourly chart we have around 480 or 580, sorry. So those are a couple of short-term areas that I'm going to be keeping an eye on. We don't really have an uptrend. You know, we kind of have, I guess you can call this an uptrend, not really. But areas of support that we're going to want to take a peek at are at around 430, pretty big support there. And the next big support we have is at 445. So 445, 430. And then lastly, around 420, and then at a bottom at 415. So those are all kind of pivot points you want to keep a look at. And kind of like I mentioned, you really want to keep an eye on institutional ownership. So if this comes back down to kind of trying to test this low here, really keep an eye if we see big chunks of money flowing. And so 50 million, 30 million, 100 million, those kind of buys. Because if we see those buys down at this, you know, in this 450 range, that could signal that smart money is eating up these shares. They're wanting to get in for a potential run higher. Whether it's short term or long term, we don't know that yet. But these are price points to keep an eye on. So I hope you enjoyed the video. There's definitely some pros and cons to PaySafe. So things to keep an eye on. And we make a video every Wednesday. I'd love to see your thoughts in the comments, but I'll see you in a couple days.